The most important piece of news that most people have covered, you've probably heard it a million times, and this is considerably one of the major reasons the market crashed yesterday. However, there is more to the story, which I will cover, and that's actually what caused the crash. I think this was just a good excuse for people or market makers to hammer those shorts bigger than they normally would on a negative announcement, a major negative piece of news. When the markets start to sell off a little bit, if they continue to slam that sell button into momentum, it actually creates for a situation where you see a long cascading liquidation of longs. People that were long start to lose on their position, stop losses are hit, which then triggers more stop losses and more stop losses. So events like this are completely unpredictable. Very few people in the markets knew it was going to come. They were already short, or at least these major market maker traders, which we are going to talk about in a second. Then this occurs and it only adds fuel to a very large fire. So imagine this very large fire turning into an explosion. And that's exactly what occurred. So I'm not going to cover the tariff stuff because, again, many of you have probably already seen it. However, this is also combined with the fact that the S&P 500 and the NASDAQ posted their steepest one-day drops in 6 months. So combine that with the fact that the crypto market, more often than not, is more volatile. It has larger swings and moves because cryptos are smaller in terms of their sheer mass, so it's easier to move them with less amounts of money. So if the S&P 500 and NASDAQ are dumping and having steep one-day drops on this news, you can bet your butt that crypto is also going to get hammered. And that's exactly what occurred. Most altcoins that are not in the top 10 dumped upwards of 50% in a single day. The entire crypto market dumped 22%. Now, typically in a TradFi market environment, a 20% low off of major highs is considered a bear market. Not in crypto. In crypto, you can see that in a single day. What takes larger markets and TradFi markets sometimes months to happen, crypto did in a single day. And so this is really the game that you're playing. You are playing in an extremely volatile environment where it doesn't require as much money, and there are far fewer players with all of the money in that market that can really move the market, which is why I've consistently tried to drive the point home to all of our Altcoin Pro University members who are consistently on these calls learning to do technical analysis with me every single Tuesday, that if you are playing with any amount of leverage and you cannot consistently be profitable with spot crypto, just buying and holding at the right time on the right pivot point, practicing discipline with your stop losses, there's no reason you should be using leverage unless it's 1x to the short side at max. And even then, most people get wrecked, which means one thing: leverage is dangerous. If you can't be profitable with spot, with no extra borrowed capital, you're not going to succeed long-term with leverage. Leverage is just like a fire, and it can be used to warm the home, but more often than not, for people who lack discipline or skills, it burns the entire home down. And we have to understand that even for people that have been in the game for a decade and are good enough to make $30 million, can still lose it in minutes when you're on margin. Now, this person was in anywhere between 1.5 to 3x margin. They were making their rounds all over the place, talking about all the mistakes that this guy made and how he screwed up. And I just want to be honest with you. I want to level with you. Everyone makes mistakes. This guy probably made such a large mistake and he's built a skill set that he can do it again. It's just that he's likely never going to make this same mistake again. Now, from my own personal perspective and from my own mistakes, there was a 2-day period of time where I lost 200K in a single day in the Terra Luna collapse. That one hurt. That one sends you back. That's the type of money that you could put into a down payment on a very nice home. I would have been further ahead. I've had situations where I sent 3 to 4 grand to the wrong wallet address and it was completely gone forever. So many people are still wondering, are we still in a bull market? With the type of move that we just saw yesterday, again, we saw the market pump and rally really hard to about $126,000 on Bitcoin, while at the same time, we are seeing more and more Bitcoin continually leave exchanges in a very slight little pump to the upside in terms of exchange reserves, which means some people were depositing Bitcoin onto the exchange to sell, but that's probably because they need extra cash and capital because they got wrecked in another environment. So maybe this is investors who are worried that we have officially topped off. Maybe this is people who literally need to pay off a loan because they were sitting on this in a cold storage wallet, and since they got wrecked, they're like, I need to start over. You name it. We don't know why, but here's what I do know. Consistently, more and more Bitcoin is leaving exchanges, and we still hit a new all-time high with some crazy volatility to the downside. This still leads me to believe we are in a bull market. So what truly caused this crash yesterday is not just the fact that the Trump tariffs was a major announcement and the fact that the NASDAQ and S&P are down. That added fuel to the fire, but it really just came down to market makers and leverage. And I think the timeline is really well explained by the Kobisi letter. So here is how things essentially went. The more you learn about October 10th, the crazier it gets. First, crypto began selling off at 9:30 a.m. Eastern time. Again, the crypto market was likely just following the stock markets basically falling, and a lot of people are starting to hear rumor about some issues surrounding the tariffs, but that hadn't occurred yet, so they could just be hedging some risk, right? The first tariff post actually happened at 11:57 a.m. Eastern time, about 9 a.m. Pacific Standard Time. At this point, many whales were already loading shorts in anticipation of a big drop. So it could have just been whales, but believe me, market makers are on the other side also ready to take that trade. Then at 4:30 p.m. Eastern Time or 1:30 p.m. Pacific Time and 4:50 Eastern Time, a whale purchased over $23 million in shorts. So think about that. Doesn't require much money for the crypto market to crash. Where it gets even more crazy is that longs were liquidated at a 7-to-1 ratio to shorts, also historically high. This means that the vast majority, likely 80+% of people, of the 1.6 million traders who were liquidated were levered long. Therein lies the problem: greed. Greed is what drove the majority of these people to think, you know what, we are officially pumping to new all-time highs. We just saw it on the chart. Let me start to borrow way more than I can possibly or reasonably afford to borrow. My liquidation level is very close to my current entry, and you get all sorts of people that honestly just think we have to go up, and that's what causes these issues. Combine that with some major whales who are able to actually do bigger trades and bet against these people who also have access to data and order books. So think about that. There are very rich and powerful market makers who either sell or use the data on any one exchange like a Binance to trade against you. They look at the total amount of traders, the amount of money, where the majority of traders would be liquidated if they hit this range, and they're able to short down to that range with just enough money. Would it cause cascading liquidations? Would the market dump from well below them? Would they hold that short? Where would they cover? They know all of it, and these quants do a really good job of doing that, to the point where markets can get far more nasty and volatile than you would ever expect, especially upon really negative news, which again adds fuel to the fire. The whales then promptly sold shorts into a 5:20 p.m. Eastern time bottom just 30 minutes later as volume crushed longs. Volume was so strong that it led to the first ever $20,000 candlestick in Bitcoin and a $380 billion drop in market cap before a slight V-shaped bottom and shorts were closed. Not only was this the largest liquidation ever, it was 9 times the previous record. And so after having done the math on all of the liquidations and waiting for that 24-hour period, I double confirmed it. It is true. There were more than 1.6 million traders liquidated and over $19 billion worth of leveraged crypto positions that were liquidated. Now, here is the craziest part. We've already looked at the numbers, and the reality is they're likely far bigger. A lot of exchanges underreport or misreport through their data and API collection to the point where it's likely closer to $30 billion of just leveraged positions getting wiped out. That's not including the net worth or the value of everyone's portfolio, which is actually far greater. So this is just people using leverage and borrowing. And this is the problem, guys. You cannot be borrowing in this volatile of an environment unless you buy those bottoms. So we might have an opportunity, and I'm not saying use leverage, I'm not saying borrow, but when you see this much liquidations and this many players wiped out in a general trend and bull market, this might be one of the greatest and biggest opportunities you have to finally get ahead. So whether you have to start over right now because you were in a bit of leverage, or whether you've been waiting for the perfect dip to really add to your position, I'm not saying this is the ultimate bottom, but I am saying this is a good opportunity, seeing the amount of people that are officially out of the market.